Hi, welcome to All International. And I'm going to talk to you today about credit scores. Make it simple. So, this video, we will talk about the three credit reporting bureaus, which you probably already know, but we're going to begin there for those who don't know. What goes into your credit score, we're going to break that down. I've made a nice little graph from an Excel document. And the FICO score, we talk about the range of what all those numbers mean from 300 to 850, building your credit and how I was able to do that with my credit score as an example, and improving that credit utilization score through things like increasing your credit cards, but not just any credit cards with no annual fee. Disclaimer, I'm not a financial advisor. Please see your own financial advisor. I'm an academic advisor, but officially in the finance world, I am not. So, how many of you have heard of the credit reporting bureaus? The first one is Equifax. We have TransUnion, and finally Experian. And I would speak a little bit about Experian Boost, the new program that they're starting a little bit later. Now, these three companies are private companies. They've been around about 50 years. And what happens is you take all of the scores and you look at from those you can get your FICO score, basically. Your FICO score is your official credit score. Now, there are many million, a zillion websites that want to charge you for your FICO score, but in actuality, you can get it for free once a year at the following URL, annualcreditreport.com. So what affects your credit score? I was going to make a joke, but I'm also not a comedian. So again, it's important to not give up one's day job. I'll just go right into it. Let's look. So I've purposely made the graph. Excel does this for you. It's awesome. You probably know this. I was able to just enter in the amounts and the categories and then choose the table, the graph that is displayed here. So the largest chunk, and I did this so that you can visually see what plays into your credit score more and what plays into it less. The largest chunk, of course, is your payment history. This is what happens when, what is comprised when you pay your credit cards on time, your bills on time, your, when you, any kind of loans that you have, if you pay them or if you default on them. And so one thing to remember is if you are not paying an entire, say if you don't have the money for an entire credit, all the money that you have on a credit card, it is so important to pay the minimum. That's why they make the minimum so small. $15 or $25 is the minimum payment. You have to at least pay that instead of paying zero. So say if you had $700 out on a card and you're like, I can't pay the $700 in this month, and then you might want to get as far away from it as possible and pay nothing because you know you can't pay the entire amount. But in fact, you must pay the minimum amount in order for that to not be held against you in terms of payment, like non-payment. So you pay the minimum amount, and then at least you have that. And then, of course, they will also charge you interest on top of the amount that's still outstanding. But that's a topic for another video. Here we're just going to talk about what goes into your credit score. So the next biggest component is your credit utilization, 30%. Now what does that mean? It really is a percentage. It means that if you have, how much credit are you being awarded? So credit cards have limits. Say if you have a credit card that has a $10,000 limit, Well, if you put $5,000 on the card, then you're using 50% of that card. Your credit utilization would be too high. It's 50%. They don't like to see that. They like to see a lot less, like under 30% or less. So if you only had one card, that's what it would be. But if you said, let's say, and this gets into the point of this video, if you had two cards, and each of them you had $10,000 limit on them, and you still used the same amount, 5,000 total, over your two cards, then all of a sudden, the amount of credit that you're awarded is like 20,000, and you've only used 5,000. You've only used 25%. So your credit utilization score has gotten better. So that's what we mean by credit utilization, and that's the method I'm going to talk about in this video of how you can increase your score. Age of your credit history. So back when I've always had good credit, but I didn't know how my credit score worked, how this FICO score worked. So I would do things like, 10 years ago, if I had too many cards, or if I had a card that I didn't think I needed anymore, I would cancel it, because I would think, I don't need a card. I don't want to carry too many credit cards. But that was actually the wrong plan of action, because they average together all of your cards and how long you've had them. So someone with only 2 years of credit history, that's not as good as having 10 years of a card that's been open for 10 years. And they're taking the average of your credit history. So when you get a new card, say if you get a new card this year, I got some new cards last year, then that averages in, and it actually lowers your credit history, the age of your credit history, because it's the average. So that's just how that works. It's something to think about. New credit inquiries. So how many of us have seen those commercials where they slap your phone out of your hand and go, oh no, don't apply for a new card. Don't you know that lowers your credit, your credit score? Well, the truth is not by much. I mean, it might ding your credit score 1 or 2 points, and that ding might last 3 or 4 months. It's 10% here, as you can see. So it's much more important what your credit history is, your payment history, and your credit utilization. And then finally, the mix of types of accounts that you have, 10%. So, they want to see some, like mortgages, and some credit cards, and some, different kinds of loans, short-term loans, long-term loans. And that's what makes up your FICO score. So we will, now what number is that score? The FICO score, like I said, starts at 300, but that would be very, very bad score. You wouldn't even be on the board. As a matter of fact, if you don't have at least 600 points, you really have very poor credit. So starting there, you can build up. You can have fair credit if you get up to perhaps about 669. They would consider your credit fair. Also, that's not too great. From 670 to 699, you're starting to get into the good credit range. Now you're on the table, they can talk to you. Someone somewhere might be able to be interested in giving you credit. They might give you a higher interest rate because you still are below 700. So 700 to 749 is very good credit. It's above average. And 750 to 850 is excellent credit. And that's really where you want to be. Now, there's a very, very small percentage of people who actually have, and that's like less than 4%, who actually have a score of 850. But it's not impossible to have a perfect score. I don't have a perfect score, but one could certainly aspire to that. I have I would call an excellent score. Recently, I scored 795, which I think is great. Like I said, for years and years and years and years, I didn't have that because I didn't know how credit scores worked. So I was shooting myself in the foot by not having enough credit awarded to me. I was already not using very much credit, but I also didn't have credit in my name, enough credit in my name. So my score kept hovering about 750. I think the highest score I was able to get was like a 777, which I was excited about. But in just a few short months, with intention, I opened up accounts, and now I have, and anyone can do this, $102,000 of credit available to me. So that's my credit limit. I'm never going to spend that amount because I wouldn't be able to repay that amount. I pay my credit cards off in full every month. But when I increased my total credit limit, then my credit score went up, and that's why I have a 795. So you see, anybody can get a 795 or 800 or 850. All you have to do is know the game and then play the game by the rules. Know the rules of the game and play the game by the rules. Now, a word on cash. I believe in cash still. Some people will say that, they don't and so forth, but you need to have a cash mindset. That is, if you're going to use credit, you're actually thinking of the cash you actually have on hand at the bank, because that's what you're going to use to pay back the credit. Credit is not a thing. Philosophically, people have to realize that credit is just a placeholder to get to your cash. So if you take out too much credit, if you utilize too much credit, that the more credit than you have cash for, then you have just made trouble for yourself. What you want to do is, in order to play them, they're playing us with these credit cards, is you want to be able to pay off your entire balance every month. That way you don't pay any interest ever. And you don't pay any late fees for, because you're not late with your payments. So I really just try to spend on my credit cards the amount of cash that I have that month to pay off that credit card in full. But I actually really wanted to talk about the difference between cash and credit, because sometimes it makes a difference. And I took this picture because I had to take out this much cash to pay my car repair. Because at my car repair, many institutions are doing this now. They decided that if you use a credit card, they're going to push off that 3 to 4% charge for using credit cards. They're going to push that onto the consumer, onto you. And I was just like, I will not be undone. You are not passing that on to me. If you're going to charge me 3% or 4%, I'd rather keep my money in my pocket. Why am I paying you an extra $30? I'm not going to spend money to spend my money. So my bank was on the same street as my car repair place. I simply went down the street, got the cash out of the bank, went back down, got my car repaired, gave them all the cash, kept my extra 3 or 4% in my own pocket. Wow. You have to be ready to understand what they're doing so that you can benefit yourself. You have to look out for yourself. So that's about it. As I've mentioned before, one of the methods I used to get my score up to a 795 now was just to simply increase my credit. And so I increased my credit cards. I call these, I have my own nickname, NAF cards. Those are no annual fee cards. So here's a link that I'm going to give and share with you. I believe it's only for the first few people who apply. This is a referral link. This is the first time I've done anything like this. If you go ahead and apply using this link, then you should be able to get a $50 statement credit on your credit line once they accept you and so forth. Discover card is just one of the many cards that has no annual fee. It's a NAF card. This is what I recommend that you build your credit with. You can join cards for the sign-on bonuses, but as I've just previously stated, we're going to treat our credit cards as if they are cash. We're only going to spend the cash that we actually have, because in reality, you should treat your credit cards like they're cash, because once you use that card, you owe them the cash and then some. So you don't want to, if you carry a balance, you don't want to have to pay extra. Again, that's paying cash on cash. It's just paying cash in the form of their interest that they are charging you in order to spend your own cash. It makes no sense, right? But this is the world in which we live. So with that, that's about it. I know you're going to do great. I want to encourage you. I was going to mention a couple of things. One is the new Experian Boost that I was alluding to earlier. With that, it's a special program. I haven't used it yet, but I heard it's pretty good. It's a pretty good way to raise your score, because they take into account your bill pay. When you pay your utilities or you pay your rent, that will actually get counted, because we all pay our utilities, otherwise you don't have utilities. But currently, that's not considered in your credit score. And so for all that hard work that you've done paying your utilities every month, you don't get any credit for it. With the new Experian Boost, and no, Experian's not paying me any money to say this, but with their new boost, the way you're increasing your credit score is they're giving you credit for all of those on-time payments for your utilities. So that might be a way to explore. If you do that and it's successful for you, please make a comment below so that the rest of us can know. And that's what I like about YouTube, is it's very collaborative. So I do read the comments. Please comment below. And let's see. That was the one thing I was going to say. I will just leave it there, and because I don't want this video to be too long, we will resume in our next video. Thank you.